From an institution perspective, one, it helps cross-border payments and a simpler, better, faster concept, especially if you consider the low costs attached to it. Two, you find that it not just improves cash flows, but it also allows access to global markets. Three, new revenue channels, not just for emerging CAS and VAS, which is crypto asset service providers or virtual asset service providers, but you'll find your traditional institutions diversifying their portfolio of work or their offerings to their clients, and you find stablecoin being part of that new umbrella, and one that doesn't just create job opportunities in terms of new hires and allowing that space to grow in existing infrastructure institutions, but it also gives rise to new SMEs and enterprises in the space. Key important part is improving liquidity, market liquidity, and that is not just making more money off money, but when you get into certain use cases, and I'll fast forward to the central bank case uses and some of these conversations we've had, is where stablecoin can actually be used as a monetary tool. So if you look at the cost of money in terms of management of money, cash in transit, etc., and you compare that comparatively to, and also keeping in mind seigniorage, which is the cost of making money, which contributes to about 1.5% to on average GDP in African countries. If you kind of compare that cost and that expense that money has compared to stable coins and the utilization within central banks, where they use it as a monetary tool in the instance of quantitative easing and tightening, which will be a topic we'll talk about a bit later, you find that not just individuals or corporates can use stable coins to their advantage, but also regulators, specifically central banks, can also use it to assist with certain pressures that they have from a stability perspective.